Hey guys, Jeff Wilde here. What I want to do is a video where I want to talk about what I call the doom and gloom and fairy dust peddlers. So what the heck does that mean? Well, basically, there are always two groups of people. There are a group of people who make fortunes pounding the drum of doom and gloom. Okay, basically what this means is they are telling you that things are going to zero. So basically what happens right now is I'm looking at a 4-hour chart of the Dow Jones Index. If we look way up here at the top, this is right before the crash started to happen. Okay, if we're sitting here, I think at that time the index had made the 108th new record high. So things were looking great. But nobody could have foreseen that the markets were going to go crash down. But the virus happened and we've had an unprecedented sell-off in a short amount of time, right? So let me just go back on a 4-hour chart. And by the way, this is a great free charting platform called tradingview.com. Kind of really like. Let's do a 1 month here. Okay, now what I'm trying to do here is just, this goes back way back on the Dow Jones. So what I want to talk about first is what I call, if we go back in the early 1990s, right? Keep in mind, you have to pretend that you can't see everything to the right of my cursor, right? The markets were hitting new highs. But there was the doom and gloom peddlers who say that the market was going to crash down. It can't possibly come higher. And I remember it was somewhere around 1993, 1994. A best-selling book came out. It was called Bankruptcy America 1995. Basically, the author made an incredibly compelling statistical argument why America was going to be bankrupt by 1995. So basically what he was saying is the economy was going to crash. He was telling you to get out of the markets, sell everything, wait on the sidelines, right? And I bought into it. I mean, I didn't, at that time, I didn't have a lot of money, so there wasn't anything to sell out of. Okay, but the point is, freaked out a ton of people. Well, guess what happened? This guy's argument was dead wrong, and we went into the biggest run-up we've ever had. This was the big bull market of the mid to late 90s. Okay, so basically what happened is there were a lot of people who missed out on this whole move because they believed that the market was going to crash. The doom and gloom peddlers all the way up for this whole decade of the 90s was saying sell, 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 short the market. So countless people lost their money because they're trying to short a heavily rising market. All right. Also, other people just didn't get in because they didn't believe it could go higher. All right. So the cycle anyway happens over and over again. Eventually, we did have a sell-off. This 2000, 2001. And at the time, this would have seemed severe. Nobody wanted to get back in the market, and nobody could have thought that the market was going to go higher. But the cycle repeated as the market started to go higher, make new highs. Doom and gloom, people are saying it's going to go down, going to go down, going to go down. Okay, so a lot of people didn't get in. Now it did crash. Okay, but then the cycle repeats. So basically what happens is doom and gloom, doom and gloom. People were saying down here the market was going to go to zero. They thought that's it. Okay, finally it can't go higher. Now, important thing to remember is, on the other side of the coin, there's the fairy dust peddlers. These are the people that are making a ton of money telling you to buy, okay? And they're saying things will go up forever. So basically what was happening back in 2000, late 1990s into the bubble, all of a sudden everybody became a trader. No matter where I went, the dry cleaners, people were sharing stock tips. Everybody was getting a day trading account, all right? It didn't matter. Students, waitresses, anybody now had a trading account. They were active. But the thing was, they were just blindly buying because the fairy dust peddlers were saying Well, the market's gone this far, it's going to keep going. So back in here, when the market was up like 10,000, they'd say, oh, it's going to go to 20, 30, 40, 50,000. So you thought you couldn't lose. Okay. The same thing was happening up in here. All right. You had two camps. The doom and gloom people were saying it's going to crash. Now keep in mind, if they say it long enough, at some point they're going to be right. But they've been saying it since 2008 that it was going to crash. So they were kind of like, it took them 12 years to kind of be completely right. Okay, but there was also, I noticed a lot of like articles coming out where they were saying like when the Dow was getting 29,000, so forth, very compelling arguments where the Dow could hit 40, 50,000. Okay, very appealing to our greed glands, right? We all want to make more money. So maybe you don't trade stocks, but let me show you how this applies in every market that affects your life. Okay, this is a oil chart, Brent crude, right? Everybody is obviously affected by the price of petrol, right? So you can see way back here in 1998, petrol is way down, like $9.14, somewhere in that area, right? Now here's the important thing I want to give a real world example. When oil was going up, just exploding to new highs, I can remember I was living in Los Angeles at the time, and we had traditionally had the most expensive petrol in the country. So I think when the oil started hitting these new highs, we were probably paying over $5 a gallon. I'm not quite sure what that is per liter. And I know that a lot of you in other parts of the world, you might think, oh, that's not expensive to what you pay. But to us, I thought, oh my God, this is going to be the new norm. All right, I'm thinking, okay, $5 is the cheapest I will ever get a gallon of gas. So what ended up happening is that the doom and gloom people kicked in. Basically what was happening is, people were selling their big trucks and cars because they thought, it would be too expensive to run. A whole new industry kicked in. All of a sudden, everybody was buying little mopeds and scooters, all right, because they thought it would go up forever. But of course, you can see, nobody could have foreseen that all of a sudden the market was going to sink by probably 60, 70%. And all of a sudden, when we came down here just, 1 or 2 years later, we had very inexpensive petrol down here again. Okay, now, I remember specifically when the market was up in this area, and, I'm thinking, okay, this is the new norm. We are never going to see cheap petrol again, at least in the U.S. So I basically bought into some like oil sector stocks, okay, because I thought, okay, that is a safe bet. We're never going to see cheap petrol again, therefore it's a safe bet. Well, guess what? I was wrong. I lost a bunch of money, and I finally got out when the market was selling off down here. I didn't think that the market could ever go down, all right, based on what everybody was saying, which was the market, the oil, cheap oil is, no longer going to happen. And this was also, everybody's really starting to beat the drums on alternative fuels, alternative energy, stuff like that. So here we are again. I mean, nobody would have foreseen petrol went down to like, crude oil, $23 a barrel. Couldn't have foreseen that the coronavirus, lack of demand, a price war between, I think it's Saudi Arabia and Russia, okay? So the point is, you can't blindly do things because of either, the fear mongers or the fairy dust bubble people, okay? You've got to step back. You want to still read the charts because the charts tell the tale, all right? And I'm not going to get into that now, but the charts give clues what can happen, okay? And usually when anything, the sediment is too strong that the market's going to do one thing or another, then it's time to start thinking about being a contrarian. Let's go to another one, gold. Okay, here's gold back in 2001. Remember, this is when the bubble happened in the stock market crash, right? back here, gold was going sideways for years. Now, back at the time, there was the gold bugs. These were the people that said gold was going to, explode up. They had been saying that for years, but it didn't do anything. But eventually, they were proven right. Now, here's the thing you have to remember. When gold finally started breaking out, this is when the gold bugs and people selling newsletters were making fortunes, because they were saying, oh, gold's going to go to 2,000, 3,000, 5,000, 10,000. So people were starting, the general public is starting to buy blindly. And the problem is that because the fairy dust was in the air, people were starting to blindly buy. As the market's making high highs, even people were jumping in like 1,800. As it's getting 2,000, they thought, I'm safe because I was told gold is going to go to 10,000. Well, guess what? A lot of people saw their investment evaporate. Let's go to just a couple more real quick here. Let me see if I can find this here. Okay, let's go to markets, CFDs, World Energy. We did that. We've done energy. We've done metals. Okay, let's go to CFDs. Let's see how much history I can pull up on the British pound. Okay, this is a good one. British pound, US dollar. This was one I personally love to trade. Okay, we can only get back to 19. Okay, so we get a lot of history here. Now, and you'll notice too, all these big moves, like they kind of mirror other markets. If you kind of go back and you say, okay, well, when the stock market crashed, look what happened. All of a sudden, the pound started to rise, okay, against the US dollar. Okay, now I specifically remember as the market was climbing up in 2006, okay, 2007 and so forth, there was countless headlines and people saying the US dollar is dead. They said it's going to, be basically worth the price of toilet paper. It's just going to be a worthless currency. People are saying that China is going to dominate the world, and other, and so forth. And I can remember I used to do, kind of share my thoughts in a newsletter and stuff like that. It was just a free thing. I kind of send out an email of my thoughts every once in a while. And as we're getting up into 2008 area here, I started telling people, I said, listen, I kind of feel like the British pound, US dollar is ready for a sell-off. And I said, it's not because I'm smart or anything. I said, there's just an overwhelming amount of people, everyone in the press is saying the US dollar is dead. Okay, that kind of made my spidey senses go off. Okay, the alarm bells happened, and I thought, okay, something's not right here. I need to kind of think about trading in the other side. Well, guess what? You would have never thought back here, 2007, that the pound would be way, way down here. So now think about it, though. What's happening? We've had Brexit. So a lot of you might be thinking, okay, that's not good for the British economy. The world is coming to end in the UK. The pound is just doomed to keep going down. But is it? We're kind of in that extreme now. Now, time is going to tell, okay? But this is just something to keep in mind. So I want to keep this video relatively short. I'm almost at 15 minutes, but my point of this is, please pay attention. When the doom and gloom peddlers are, pounding the drums and saying things are going to go to zero, that's the warning sign that maybe we're getting near a reversal point. And then also when the fairy dust people are saying that market is going to go up forever, okay, that's the time to start thinking, okay, the party might be coming to an end. And there are ways to trade off of this, which I can't go into now. That's a whole separate thing. In other words, ways to position yourself. But, please keep this in mind, because I don't want you to be caught on the wrong side of the market. And I don't want you to do what a lot of investors do, which is they wait till everybody is unanimously saying it's safe. They get in and then they get caught on the wrong side. So that's it. I hope you learned something from this video.